Hey everyone, welcome back to Corporate Decode, the channel where we sniff out what companies are really doing. Today we are diving into a report from Columbia Strategic New York Municipal Income Fund. A lot of words I just said just mean these are people who invest money in New York and other states, and they have to tell us how they are doing. It is not usually very interesting, but you never know what we might find. They have to tell us what they are investing in and how much things are costing. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss with me and other sharp minds. Let's jump in. This report is for the 6 months from November of last year to April of this year. Remember this date because that is when they are figuring numbers out. It is important because things can move up and down really fast when investing. So how much does it cost to have these people handle your money? If you had $10,000 invested in Class A, the cost would be $37 or 0.76%. The other ones are a little different, but around these numbers. Now, remember that if you are investing, fees matter because they take away from how much you can earn. They want you to know exactly what the fund is holding. It is different kinds of bonds. They try to say it in plain language, but some things you just can't get around using some business terminology. Here are the top holdings or the biggest investments of the fund. First is New York City Municipal Water Finance, which is boring to say, but it does exactly what it sounds like, financing the city's water. Then there is Triborough Bridge and Tunnel Authority, financing bridges and tunnels, which sounds simple, but they make money just from the tolls people pay. The rest is stuff around transportation, anything you use that the state needs to make money. They have different categories showing the investment ratings on bonds from the safest to the riskiest and how the different investments stack up. Ratings come from how agencies like Moody's and S&P rate them. Some people like to look at rating heavily. This fund is holding lots of different things, and this table represents how much of each thing they hold. A significant amount is municipal bonds, almost all of it, and some floating rate notes and money market funds. The fund mostly invests in municipal bonds. These are debts issued by cities and states to pay for public things, and it also holds 1.7% floating rate notes. Diving deeper under the floating rate notes, they have revenue bonds, for example, New York City Transitional Finance Authority, which makes money in the future after taking out tax, who in turn is subordinate to JP Morgan Chase Bank. They invested in air transportation, charter schools, waste disposal, higher education, and more. These are a little more specific in who they help, for example, TRIPS Obligated Group, American Airlines, and Casella Waste Systems. Interestingly, they invest in debts with Puerto Rico Electric Power Authority, which are debts in default, meaning they have not been paying those bills. The Power Authority has lots of different series of the debt, some from way back in 2010. They are playing some risky money here. They also have revenue notes and sales tax corporation ties with Puerto Rico, meaning they are in a number of different kinds of financing in an area known to be struggling and might not get paid back. One series of these notes and corporations is all the way back in 2018. All these things add up to $116 million portfolio. And at the end, they are holding $800,000 as money market funds. If you think I'm talking funny when I say million, it is because they are trying to be very, very exact with the number they give from their filing to the last dollar. They try to classify investments based on how easy it is to see what they are worth. For example, things that are being sold in an active market is called level 1. Things based on opinions, assumptions, and judgments is level 3. As of April 30, it's mostly level 2, meaning somewhat easy to tell the value. Here we can see how much capital they have, and they also make plain how much is in each class of shares. It tells us how much they owe for debts, how much they need to pay off stocks, management fees, and compensation. This makes for the total liabilities, which then affects how much net asset the investors have. As of April 30, net assets are valued at $11,17,120 investor valued at. Out of April 30, net assets are valued at $11,17,120.89. They have net investment income made up of interest and dividends, which adds up to millions of dollars. Now, putting it all together and looking at this, the investment operations overall decreased net assets. So what does it mean to be the investor? In their different share classes in the last 6 months, it was not good returns, it was all losses. They distribute investments, but it seems like some classes after distributions have fewer assets. At the end, it all depends on what you invested and where you invested at. Here are the financial highlights over the last 5 years. This shows you a breakdown of some numbers to help you see where things are going. I will highlight a couple. the total expense ratio as a percentage of average net assets, or how much in fees it costs to run the fund. It is all fairly stable around 1%. It might not sound like much, but it is a lot because it decreases the returns of the investors. The total return across 6 months is negative around 2% for all the different classes in the half year, which is not where we want to be. If the fund had money, the investors don't have the total return. It is not looking too great here. So assessing the health of Columbia Strategic New York Municipal Income Fund isn't a glowing picture. While they spread their investments across routine funds and the team that decides investing is smart with good rule sets, their debt defaults look risky and overall negative returns in the short run may make some potential investors reconsider. It is worth keeping an eye on this fund, but make sure to talk to a licensed professional always. What are your thoughts on their tactics or what they should consider doing better? Feel free to drop your thoughts below. If you like this analysis, hitting that like button really helps, and subscribe for more financial deep dives. Also, join the Discord for more discussions. Thanks for watching. See you next time.